Hello and welcome to Chartbusters. Well, the markets have started off on the back foot. However, from a bullish point of view, it's good news that we've seen a big recovery from the day's low. We're up close to around 150 points, and the bigger recovery has come in on the Nifty bank. Mangalam, I'll have to say, the first hour of trade goes to the bulls because of the kind of recovery I've seen, but interesting to see whether or not we can hold on to today's low.
Absolutely. That is the key question that we will get an answer to only by today's trading session's end, because the first support of the 20-day moving average is something that the bulls are hoping will continue to hold on the 17,700 mark. And we're seeing a big recovery, namely in the Nifty bank, and importantly, also the mid-cap index. While it is down, it is outperforming the other frontline indices as well. What's actually dragging the index today are the IT stocks, which continue to make the lows of trade. First up, all the top stories that we're tracking. Market opens lower on global weakness in equities sparked by a hotter than expected inflation print in the United States. Nifty gives up 18,000 but recovers from opening lows. IT stocks worse off, followed by realty, while financials recover to trade flat.
Ambuja Cement says its board will consider fundraising on the 16th of September. The stock hits new highs in a weak market, even as the street awaits further details on the fundraising plans.
Big bulk deals in Ami Organics as two institutions pick up stake from promoters. The management tells CNBC-TV18 that there are no further plans to sell stake from the promoters, and they also expect the company to grow at a compounded rate of 20%.
Cinema stocks continue their rally as audiences line up for the new release of Brahmastra. Inox surges close to around 6% in trade.
Logistics stocks are abuzz in anticipation of the national logistics policy due to be released by the Prime Minister. Sources tell CNBC-TV18 that a comprehensive action plan along with a greater use of automation and digitization will be part of the new policy.
Well, keep an eye on the cement space. You know, ACC and Ambuja Cements, both of them moving higher. Remember, they're sitting on a good amount of cash, but yet they want to do some fundraising. So who will that be to? What will be the quantum of the fundraising plans? And is there a potential acquisition on the cards? Just looking at some of these mid-cap names, from the broader markets, they are moving up. India Cements as well as seeing, a bit of an up move up close to around 4% as we speak. So keep an eye on that one. And Sankey Industries, that one opened up more or less flattish. That one as well is up close to around 3%.
This reminds me of the day, some of the financial companies would announce that they are looking at a press meet or something, and that day you would have any and every financial company rally in trade in hopes of some sort of M&A taking place. That's taking place in the cement space as well.
Well, that's right. Let's see what happens on that front. But clearly, the street is a buzz that something's got to give. And that's why it's bidding up both these two stocks. ACC and Ambuja, the sleeping giants, suddenly they have woken up post the promoter change. Well, let's focus on another name. That's Harsha Engineers. They're coming out with a 750 crore issue. That's open for subscription. The company, remember, is the largest manufacturer of precision bearing cages. By revenue in the country, they have a market share of 50 to 60% in the organized market. Vahista is with us to run us through more on that. Vahista.
Hi, Nigel. Thanks for that. Well, you're right. Harsha Engineers International is coming up with an IPO, and the issue size is at 755 crore, of which the fresh issue is of 455 crores, and the remaining 300 crores is an offer for sale. The issue opens today and ends on the 16th of September. The price band is 314 to 330 rupees. Now, this is, like you mentioned, the largest manufacturer of precision bearing cages in terms of revenue in the organized sector in India. Also, we need to remember that bearings have multiple end-user industries like automotive, railways, aviation, construction, mining, etc. The company has its production facilities in Ahmedabad, in Romania, and one in China. In terms of market share, 50 to 60% in the Indian bearing cages market and 6.5% of the global organized bearing cages. Also, the global bearing cages opportunity is at present at $5 billion and is expected to double by 2029. The company has two primary business segments. One is the engineering, which contributes 94% of their revenues, while solar EPC business is a smaller proportion of approximately 6% revenues. It has a diversified revenue breakup for the engineering business from Europe, India, China, America, and the others. And the proceeds from the IPO is expected to be utilized for repayment of debt, for funding their capex, and used for infrastructure repairs. Now, we also... Right, back to you.
All right, Vaista, thanks a lot for that. 270 crore worth debt repayment by this IPO. That would make the company virtually debt-free. But to discuss this and more, we do have with us the management chairman, Rajendra Shah, and CEO, Vishal Rangwala, join in to discuss what lies ahead. Thanks a lot, gentlemen, for joining in, and also welcome to the capital markets. Mr. Shah, I'd like to ask you first, you become debt-free with this debt repayment, but importantly, can you give us a breakup of your engineering revenue? We understand 94% comes in from the engineering business, but how much of that is autos, non-autos? What are the other sectors? Can you give us the sectoral breakup?
Good morning and thank you. It will be slightly difficult because we are making the bearings and we are supplying to our customers. So all the time we don't know this bearing is going to be used where. But approximately I can say more than 60% is our industrial bearing and 40% is the automotive bearings.
Okay.
And in industrial bearing, is one of the major area is the railway, off-highway, railway, aviation, then windmill. Windmill is also a very big sector for us.
Got it. Hi, Mr. Shah, as well as Mr. Rangwala. Thanks so much for joining in. Well, the last year, you did a good revenue, big number, close to around 1,300 crores odd. Could you give us a rough number? What was that capacity utilization that you functioned at? I want to understand, with your current investment, your current gross block, what are the peak revenue numbers that you can hit?
So last year we did about 60 to 65% utilization on an average basis. Having said that, we have a lot of product lines. Some product lines were much higher utilized, some were lower. And ultimately it is difficult to go beyond 80% utilization for us.
Okay.
So ultimately we can grow from here without a significant capacity investment, but we will have to invest in some pockets, looking at a product and other things, depending on how are the demands going.
So,
but yeah.
So fair to say that you can do 1,800 crores comfortably without adding any more capacity. Just going by the numbers that you're talking about. But you're going to be spending some money on some capex, right? I think 80 to around 100 crores odd. So what is the typical asset turn in the business?
Our typical asset turn is about 1:2 to 2.5, around in that range.
And the capex and the amount of money you're spending is 100 crores. Is that correct?
About 78 crores odd money on the capex is planned for next year or so.
So another 160 crores is what you can do by way of asset turn on that new capex. So if I put it together, at peak levels, you can do close to around 2,000 crores of revenues post this capex coming on stream. Are we getting that correct?
Correct.
All right, take that point, Mr. Rangwala. Just wanted to understand, of the 40% that you get from autos, how much of that is actually platform agnostic? Because EVs are rising. So do you have any products for the EV space as well? And have you added any clients in the EV space in the last couple of years?
Yeah, so through our customer, we supply to EV market. We are supplier to our customer in US, who in turn supply to Tesla. Similarly, in India, we supply to our customer, who in turn supply to Tata Motors in the EV segment. As such, for us, two-wheeler, three-wheeler and passenger vehicle is a very small market, even within automotive, because big chunk of our market is, a lot of CV, lot of off-highway, and all those products. So my guesstimate is that it should be in about single-digit revenue for us when it comes to two-wheeler, three-wheeler PV segment. So for us, a very limited impact if I look at it on a negative side.
No, because what we understand is that from your clients, a large part is Timken, and we do have a lot of them coming in, SKF as well. And they're also your competition. So does that not put you at a risk when your client and your competition are the same?
No, actually, we don't compete with our customer. We actually supply them a specific product called bearing cages, which goes into bearing. We don't supply these product or any other product which goes into directly OEM for most part. And so it doesn't make us a competition, and actually we enjoy very long-term strong relationship with our customer base. We collaborate with them on a lot of technical projects, as well as support their new product needs, and we are a critical part of their supply chain.
Okay, the solar EPC business, now small but growing rapidly. Out of this 2,000 crore revenue mix potential, we're keeping it safe. The regulator is looking as well, so you don't want you all to get into trouble. But out of this 2,000 crores, what is the potential revenues that the solar EPC business can generate?
See, solar as a potential is very, very large,
yes.
But it is a very competitive business with, a lot of interest from, multiple parties, and a very difficult business also. So right now we are in a transition where we are restructuring this business to focus on a narrow segment and to be very profitable within this business. So that is our focus. Difficult to actually say what would be, how we will grow in that, because our short-term focus is, stabilize and put it on a good ground.
Has your solar
so that
business broken even, Mr. Rangwala?
Yeah, we are very hopeful that this year it will break even.
And
last
this
year
year
it did
would
make a
contribute
loss.
how much to your revenues roughly?
We are estimating about 80 to 100 crore revenue contribution.
Okay, 80 to 100 crores. And, 65% of your revenues come from exports. Just wanted to understand, about 40% coming in from Europe. There is a fair amount of problem in terms of macro issues in the European region. Do you think that could be a near-term concern for you? Are those clauses built in your clients? Because, I mean, top 5 clients account for 70% of your revenues. How much of them are Europe-based? Could you give us a sense of what those guys are saying, at least for this year?
Yeah, so, right now we are not seeing any major impact on our demand cycle. But this situation is still developing, so we could potentially see some challenges. From an energy point of view, we are part of this Europe revenue. A small portion of it is manufactured in Europe and supplied into Europe, and so there could be that impact on the energy front there. Having said that, we are aggressively working with our customer to mitigate that. Second, actually, we see a lot of potential upside because we see that the wind market could improve based on European energy crisis. They continue to invest more in wind side, and we have a big segment of wind over there. And the third aspect is that we are supplying a lot of products from India, so it is possible that we will get more opportunities in India based on this crisis. So that's how we look at it.
Very quickly, out of the money that you're raising, 270 crores will be debt repayment, right?
Correct.
So you'll become debt free then?
Almost debt-free in India. We would carry some debt outside India. Okay.
And on this 270 crores, what was your rough borrowing cost, in the past year? Because I'm just trying to calculate what is the interest savings.
You can consider roughly about 12 crore or interest saving. It is an approximate number right now.
Rough 12 crores per annum is what you'll save because of the debt repayment. Well, it's been good speaking to you, Mr. Shah, as well as Mr. Rangwala.
The announcement from Ambuja Cement has definitely set the cat among the pigeons in the cement space. India Cements is now up 6%, ACC up around 4.5%. JK Cement from the frontline space, the FNO space rather, is at the high point as well. And I'm not even talking about a lot of the cash stocks which are abuzz with the announcement that has come by from Ambuja Cement itself. So what should one be doing in individual stocks, given the fact that the market has recovered a tad from the lows? We have Shrikant Chavan joining in. Shrikant, do you think today's low holds? And if it does, what stocks are you looking to back?
Good morning, Nigel. Good morning, Magadan. I think, the overall structure of the market was like very strong. And when we saw today in the morning some correction, it actually respected to the level of 17,700, which was the resistance level for the market a few days back. So we are of the view that certainly I think these lows are going to get a hold for the next few days, and we are again going to see the levels of 18,000, maybe 300 or 350 on the higher side. Also, if we go through with the short-term formation of the market, then today, after opening lower, we were of the view that the market will find it very difficult to sustain above the levels of 17,900. But in fact, the market is comfortably trading above the levels of 17,900, and number of stocks have started doing well. So yes, I think certainly we are going to see some more strength in the near term.
Okay, some more strength. All right, Shrikant. So the bulls will feel good, but individual stocks, what are you tracking and levels you're looking at on them?
Yeah, in fact, Nigel, all these individual stocks are really doing well, and they are crossing their previous highs. So one thing is very clear, that we are into the corrective phase, and whatever the correction that we saw from the levels of 18,600 to 15,200 was the corrective phase, and we are again now entering into a furthermore trending phase in next maybe the current activity is into a trending phase, and we are going to see highs very close to 18,600. Individual stocks like India Cement is certainly on which, like you discussed some few minutes back, there we are specifically bullish, and technically it has broken its previous high. So the next level to watch out for would be 275 to 290. And on the long-term charts, it may even cross the levels of maybe 320, 325. It was its all-time highest level. So broadly, we are bullish on the stock, and we should be buying even at current levels around 255. With a stop loss at 245, we can expect 275, 280. And the other stock which we like is from the logistic phase, and that is Aegis Logistics, which is currently trading at 292, 293. There we feel that the stock is heading for 320. We can keep stop loss around 280 for the same.
Take that point, Shrikant. Thanks a lot for that. With that, we move on to another special segment where we get you a few ideas coming in from our colleagues at Money Control Pro. These are ideas for profit. Khushbu Gupta Roy joins in with a stock.
Affordable housing finance is a rapidly growing segment of the housing finance sector. The market is nascent, growing at a 5-year CAGR of about 25%. The target customer base are low to middle income household with no credit history. The lending spreads are higher given the higher delinquencies for the smaller loans. A huge demand exists for this segment as the market is underpenetrated and requires steady transformation and strong governance. Key players such as Home First Finance, Aavas Financials and Aptus Value Housing have seen expansion in the loan book. Home First and Aavas are our preferred stocks in the segment. Home First is consistent performer with a compounding asset base. The company is backed by strong promoters and is well capitalized. At the current market price, Home First is trading at 4.1 times estimated book value for FY24. The valuation seems reasonable on the back of strong earning visibility and an ROA of 3.9%. Now coming to Aavas, the valuation is on the higher side, but it captures the growth trajectory with a more seasoned loan asset and superior asset quality franchisee. It is interesting to note that Aavas also had a resilient execution during the pandemic. Aptus, on the other hand, has limited trading history and the valuation is also pricey. So only investors with very high risk appetite should consider Aptus.
National logistics policy for this year. The PM is set to release the policy document on Saturday, the 17th of this month. Parikshit joins in with a detail of what is expected. Parikshit.
Well, yes, the policy is setting targets for the Indian government. It sets 3 key targets. Policy aims to reduce cost of logistics in line with global benchmarks by 2030. India should be among top 25 nations in terms of logistics performance index ranking. Create a data-driven support mechanism for efficiency in logistics. This should be a single point of reference for all logistics and trade facilitation. The policy document also speaks about promoting development of multimodal interconnected infrastructure, standardization of physical assets, benchmarking service levels, and harmonization of documents. Policy seeks to provide for an integrated digital logistics system, and the National Logistics Policy will be a comprehensive framework for all subsectors of the logistics system, all ministries which are dealing with logistics, and make sure that they work in a coordinated fashion. The empowered group of secretaries under PM Gati Shakti will monitor the implementation of this program, and they will also set up a service improvement group. There is no financial implication as a result of this policy. The expenditure will be incurred by ministries under existing procedures.
Thanks a lot for that, Parikshit. For the time being, we'll wrap up on Chartbusters. Stay with us. Trading Hour comes up next.